Gaetano had a family thing come up last minute, so we're going to do a kind of like a little bit of a creative swap here. And so tonight we're going to be joined by Megan Bowen, who recently joined me as Chief Customer Officer and COO at Refine Labs, but previous to that has been very accomplished, worked at ZocDoc, which I think had a really big exit. I don't really know the story, but then a company that exited to WeWork, and then a couple other startups, and has built a lot of customer orgs, account management, customer success, things like that. So we might get a different perspective here. Leadership, women in leadership is an interesting topic to cover. Customer expectations, customer success, some marketing, a lot of sales. Like we can cover a lot of different topics here, which is cool, right? Like Gaetano and I can chop it up about SEO and stuff all day, every week, but you know, here we are, we'll make the best of it. Happy to have Megan here. We'll pass it over to you if you want to introduce yourselves to everyone.
Thanks, Chris. Happy to be here. Hello, everyone. Thank you for the nice welcome messages in the chat. This is actually day 7 of my career at Refine Labs. So it's been a great ride so far. Really happy to be here. I've actually been binging this podcast when I decided to join Chris. So I think I'm on like episode 19. So it's been great to see the journey so far, and honored to be here tonight to chat with you all. Just to give you expand on what Chris mentioned, I've been in B2B SaaS companies for the last 15 years. Started a tech company called eChalk and was an account manager for 7 years, and really mastered that entire discipline, account management, customer success. I then hopped over to ZocDoc and built out the post-sale function there. Then did 4 years at Grubhub Seamless, built out their B2B account management team, went to Managed by Q, where I started in account management, but then took over sales, operations, marketing, became chief operating officer at Q. We exited to WeWork, which was great until it wasn't. Then I had a quick stint at another B2B food tech company. Coronavirus happened, negatively impacted the business. And you know, everything happens for a reason, because now I'm here and super excited to be working with Chris and the team at Refine Labs. So excited to get into it. Happy to talk about any of the topics that Chris mentioned, and excited to learn from you all a little bit more about marketing.
Right on. So let's do it. I'm going to get it started here we have an agenda, which is cool. Again, questions can drop in. I'm going to get it started on a post that I posted a couple of days ago that got a good amount of traction, which is the thesis of the post is that brand lowers cost of acquisition, that most people don't understand. I think most people overlook that idea. And what happens is when you create a brand, you create a lot more organic conversions that happen organically, not through SEO, just they happen. You're doing some activities to create it, but it continues to build and over time can lower acquisition. You're not in a performance marketing type of environment. It's actually going to get less efficient as it scales. There's only so many people that you can drive into a funnel and then call, right? And so over time, I've talked to a lot of smart people that are starting to adjust this. I've had several conversations with VP marketing that I'm super aligned with on this topic, that still run performance marketing, but recognize when you hit diminishing returns, which is much earlier than you think. And once you hit diminishing returns, you can keep that engine running. You can keep passing those people to SDRs. It's probably going to be, depending on your budget size, somewhere between 10 and 25% of your budget. And then you need to architect with the other 75 what you're going to do with it. And so my recommendations, I mean, these are well published and we've talked about them a lot. And so, yeah, just wanted to get it started there. I think it's interesting, and kind of going off of that, we had a question that came in. Sorry if you hear my dogs in the background here, so she might be hanging in there. The first one that we had was how a marketing team that is focused primarily on organic content should be structured. And so Megan, feel free to jump in if you want. These couple of these are like really focused on marketing, so I'll handle them and then we can get to Q&A quickly. But this was a question, so I'll answer it. The way that I think about this is not much different depending on whether you're doing organic or paid. You're just swapping out one person on the team. And then you have to define what is organic content. Is it SEO, or is it organic social, or is it events, or different things like that? But it still breaks down to a core team of 4 people. The 4 people are: 1, the architect, the leader who's overseeing the activities, prioritizing, managing, understands customers well, all those different things. Number 2 is the subject matter expert. That person is going to be the person that leads the content strategy, typically a thought leader, or can be positioned as a having leading thoughts. The next one would be a creative. So creative pictures, videos, different things like that. Ideally, that person could also be a writer. It's very rare to find all 3 of those skills in one. So if you want to have a 4th, it would be a writer. And then the last one would be distribution, which is the only thing that gets switched in the model. And so if in distribution, you're focused on SEO, you would get someone that's heavily focused on optimizing content for SEO. If your distribution was paid social, you would get someone that's very good at distributing via paid social. Same thing with email. Somebody that distributes content should be good at multiple channels, I would hope. And so it's weird to think about, but I've started to think about marketing teams more in content creation and distribution, as opposed to how a lot of people would normally think about it. So that's the rundown there. That's kind of how I see it. And then you can further specialize as you see. Maybe the one subject matter expert is, going hard, and you need to find another channel for more content, and you would get another SME, or you could add specializations from there. Cool.
I think that's fair, Chris. And when you think about org design, I think that's a good rule of thumb, but every organization is going to be different, right? And everyone's going to have sort of different budget, different setup, different resources. And when I think about building teams or structuring an org, I always start with what outcomes do I need to drive? What are the goals that I have? And take sort of anybody that exists on your team, or sort of whatever legacy structure you inherited, and just put that to the side for a minute. Going through a brainstorming exercise, if I could build this team from scratch, that would map back to my goals or the outcomes that I'm trying to drive. What would that look like? And then when you kind of have that brainstorm, you're in that dream space, you do that exercise. It's really interesting when you then compare that to what you have today, and then figure out what is my roadmap to go from where I am today to get there, right? Many of us, especially when we come into an org, we inherit a team. We can't build something from scratch or change it overnight. And so I often find people will come in and just try and optimize what they have without actually saying, if I had a blank slate, how would I do it? And how can I get there given my current situation? So just to chime in on how I think a little bit about org design, I love that topic. So it's a framework to think about in addition to sort of some of the rules of thumb that you just shared.
Right on. Love you jumping in there. That's great. Cool. We're moving on. The next question we got in from Rowan, I believe, is what, if anything, would you do differently in demand gen if you're selling 100K plus deals? And so, interestingly, I look at this a slightly different way, which is not about the deal size. It's about the total addressable market, or TAM. If you only can sell to 100 accounts, you're going to have to do stuff different. If you're selling 100K deals and you can sell to 10,000 accounts, you're also going to do things different. So I think about it more about the addressable market than the deal size. I focus in on 10K to 150K deals is kind of like the place where I like to play. I think it's where my model adds the most value. Not that it wouldn't work in enterprise, not that it wouldn't work in super transactional, but I find that our offering is highly differentiated and highly valuable in that type of ACV range. Now, what would I do differently? As you start to move up in deal size, the thing that I would do differently is focus more on organic content. Not on just SEO, but focus on organic, because it's a long sales cycle and a long nurture. When I say nurture, most people immediately go to email. I think I floated this around last time, and I think it's a really smart idea for people to think about, is to find a platform that has a lot of organic reach. Right now, that would be LinkedIn. And I would build up a following, and I would pump content out of that channel, and I would do whatever I can to get the people I want into that stream. It's essentially what I'm doing. right? And so if you want to do it through a company page, I've played around with this idea, and at some point I'm going to test it. I hope I can soon. Is the idea of running LinkedIn ads with the objective of the ad is to drive followers. And then in the company page, once they follow the company page is pumping out 4 to 12 pieces of content a day. And that would work. People write off company pages because they think that company pages don't work. Personal profiles work better, but company pages can work. The reason that company pages don't work is because companies suck at doing it. It's because very few people, but you can see a couple pages. We're doing experiments right now. We're posting 3 times a day on the company page, mixing in video, posting. We're growing a couple thousand followers a month on it organically. And the engagement's growing over time. When you get to 10,000 or more followers, and that's going to be a meaningful audience. And I think a lot of people could learn from that while it's early. The last piece on that is it only takes a little bit of a shift in how LinkedIn ranks the algorithm for company pages to be a lot more important. You just need to think about the dynamics between a personal profile and a company page. So in general, just to close this one out, I think as your deal size gets bigger, the deal is normally more complex, less transactional, needs more education, more different things like that. And I would focus on high volume content, consistent output to the right people. Less performance driven things. And when you look, I'm sorry, I just keep having ideas and I keep going on. When you look at like a cybersecurity company that's selling 250K plus ACV deals, all they do is run LinkedIn ads and have SDRs call people. And it's a very complex sale. And all they're doing is transactional. It's essentially sales. I wouldn't even call it marketing at that point. So yeah, that's what I would do. Megan, you probably got some good ideas in this one with big deals. You've had some experience in those different places.
Yeah, I mean, I think when it comes to enterprise sales, in my experience, there really are no shortcuts. It's all about relationship building. It's about doing the right things at the right time. It's about education. It's about finding the right people. And so I think, those sales cycles can be 12 to 18 months. I think playing the long game is essential. Not most people don't have the patience or are too short-term focused to dedicate what is needed to that. But yeah, it's a whole different ballgame than transactional or mid-market sales.
Right on. So we got some questions flowing in. I think we're going to start taking questions and we'll see where that goes. We got a couple of topics on the agenda to fall back on. They're heavy marketing focus. So if we want, we can kind of punt those to next week unless someone really wants them to cover them. But let's dive into these questions because I saw several come through, which I'm excited about.
They want to see your dog, Chris.
We'll bring the dog in at the end, but she's happy to be here, but she's, I think, busy with one of her toys. So David had a question. Do you deploy any website visitor identity resolution technology or capabilities? David, the short answer is no. Marketing automation platforms like HubSpot have some amount of account identification. And if you have cookies dropped, you can know who's on the website and when they are and different things like that. So I guess in some respects, kind of, but it's not something that we use a lot. I will say there's one tactic in here that people could use that I've had a lot of success with before, is that if you're using HubSpot, I'm sure you could do the same thing in Marketo or any other similar platforms. But if you have people in your database, normally cookies get dropped in 2 different ways. When they complete a form and they can match the email to the browser, or when they click through an email and they can also match the email to the browser, a marketing email that is, not a sales email. Those are the 2 ways. Once you have the cookies, you can then trigger behavioral automated emails based on what they do on your website. And so some of the things that we've been doing is, one, if somebody hits the demo page and doesn't convert, then 3 days later, I'm going to send them an email and ask if they want to get the demo again, like almost like abandoned cart if you didn't check out with the shoes that you wanted. And we see a 9 to 12% conversion rate on those. So if you have a high volume, like that can make a difference. It's super simple. It's like a 5-click automation. So that one would be one, and you can you know, do different variations of that pricing page, went to this deep piece of content, but didn't do the next thing that you wanted them to do. And so I like having a delay. I don't like it happening like right afterwards. So I like setting 3 to 5 day windows on those, but that's totally up to you. If it's more transaction, you could move that in, I think. That's one kind of way that I use sort of visitor identification. Okay. David Murphy has a question on international SEO. David, that is very far outside of my skill range, and I'm happy to admit when I just don't know the answer, and that's something that I don't. So I would hope I can store it, and if you're back next week, we can definitely have Gaetano cover that one. I will kind of like go on a tangent on this one, which I think would be valuable, is that we have done paid social in different languages. And so in that, it starts to add a ton of complexity. And so when you think about doing this, the way that I think about it is prove the model in the top language, which is normally English. And then implement that exact same model in all of the different countries that are important to your business that also have English. So if you do the US, the next markets I'm going to are UK, Australia, Singapore, other ones like that. And then figure out the first primary international language that you want to cover based on the country. So for us, one time in 2016, it was Portuguese, and we were going after Brazil. Huge market. We had the competitor that we had didn't have FDA clearance. So it was open market. Like if we were in, we were going to win. There was no competition. And the complexities of when you do that is that if you're running paid social, one, you have to translate the web page that you're driving people to, but you also need a translated site. You also need translated ads. And so if you try, like in the EU, I have a lot of, I think the word is sympathy for the people in the EU that are managing 7 different languages and running ads in those different places. It adds a lot of complexity in relatively small markets. Any thoughts, Megan? That one's a little, I tried to give some answer, but the international SEO is just far away from me.
I think you were right the first time when you said, let's save it for Gaetano for next week. Lots of other good questions in here, though.
Yeah, feel free to grab one if you want to answer it.
Well, many of them need your marketing expertise, or would love your take on gated versus non-gated content. I know the answer to this one. Never gate your content.
Yeah, we've covered that one a lot. I'll just hit on it for who answered the question, or who asked it, sorry.
That was Lindsay Andrews.
So Lindsay, we've covered this a lot. I'll just hit it real quick, is that when you gate content, you prevent people from reading it. And so if you look at the form conversion rate on the gate, it's probably less than 30%. And if you look at the friction that's created based on someone that has to fill out the email, and then they might get through the PDF and then they might do it later. My thesis on this is to, 1, not gate the long form, but 2, to seriously chop up, if you're going to do an ebook, that the value is created in the distribution in micro form on like LinkedIn.
So Chris, actually another interesting question kind of related to this from Graham. I've heard you talk about taking down gates when doing top of the funnel content. Drift Insider seems like a pretty amazing video content microsite, and even charge for a premium offering, but they have a gate up front. What's your take on this?
I think everyone should do whatever they want is the really simple answer. Drift must have a strategy around it that I don't see. And so I think it really depends on what you're trying to accomplish. If you're trying to get people into that as a way to sell something else, I would highly recommend keeping it ungated, because getting people in is very hard. Like getting someone into an off-site long form content pillar is very hard. And so I would remove all friction possible, but Drift might have that set up for a completely different reason. They might want to get users in there to collect user behavior data. They might want to get people in so they can upsell them on the subscription so that they can do something else. I don't really know. But what I will say is when you create the offsite, again, it all rolls up to the same principle, which is that if you have it on a place like that, not a lot of people are going to get there. And it's going to be very expensive if you want to get them there. Like I'll give you a very good example. There's a gated content asset and the selling point to go and do it is that you get continuing education credits. And then we run thousands, I would say tens of thousands, probably close to 100K in ads to get people in lead forms. And then they fill out the lead form and then they can click on the link and go, or they're going to get an automated email where they can click through and then they get there and then they have to sign in and they have to go. And there's so many steps that very few people make it through. I would say that less than 10, definitely less than 20. It was close to 10%, somewhere in that range, that converted on the form actually ever got in. And you think about how much money you're spending. So you're spending $50 per person to sign up, and then only 10% are getting through. Is it worth $500 to get one person into the platform once? And so again, I think that the idea of having the platform is smart. I think that the idea of offering something valuable like credits or something is the only way that you're going to get people there at scale. And then the last piece is that you need to take all the assets that you're creating in there and distribute them elsewhere and then drive back. So it's just like the podcast. Like we're doing this podcast, we're going to chop it up. It's going to go onto an audio podcast. We're going to take the clips. I'm going to post them on LinkedIn. In the comments, I'm going to link to the podcast, and we're driving free user acquisition there all day. And it just repeats. And so if you don't have the channel to get people in, which right now is probably social or email, if you have a good list, by the way. If you don't have that, then you're spending a lot of money creating a lot of content that very few people are going to see.
Chris, you touched on a couple things, and I actually want to go back to brand for a minute. And then there's another specific question about email lists that we'll then go back to off your last point. Lori and John were talking about Tiffany. Being able to sell a gold paperclip for $1,500 is the perfect example when a brand sells, to like your first point. And just kind of bringing it back to even how you and I met and how I came to Refine Labs. I think you started posting on LinkedIn a while ago. I started posting May of 2019. We literally met on LinkedIn by commenting and whatnot, developed a relationship over a year and a half, did a podcast together, this or that. And then, I basically decided to leave my, dying company. And because of, playing the long game, I get this really cool, awesome job in the middle of a pandemic, right? So from like a personal career growth or perspective, like all these things we're talking about that you can do for your company, you should be doing it for yourself too. And investing in building your own brand because, you're the only person that you'll spend the rest of your life with. So you better look out for number one. But I think it's an interesting parallel. And you might have noticed I put on my favorite necklace, which is from Tiffany, one of my favorite stores. Had to call it out. To your last point, though, you mentioned email lists, and someone had a super specific question. Maria asked, what are some ways you can build a successful email list?
So in full transparency, Maria, email is just not my channel. Like we use it, we deploy it for customers. It drives value, but it's not a primary focus of mine. I would say like if LinkedIn right now is the stake, then email is like the tiny side that we share at the table. Like it's just not a big focus for me. That said, the way that you build an email list is by delivering a lot of value to bring people in. Like there's a lot of other hacks, like taking all the people that are in your Salesforce database and sending them emails without permission, what a lot of people do, or buying a huge list on Zoom Info or some other place and sending them without permission. That's what a lot of people do. But if you want to build a real successful email list, it's a lot of work. And my view is that there's actually a better channel to build on right now than email. A lot of people, and this is a thought that I've been thinking about a lot of people love the idea of email because you have the data which has never really made a lot of sense to me, because you have the, I mean, what do you really have? If I change my email, then you don't have it anymore. So you have it. It just doesn't, it hasn't made a lot of sense to me. It's a distribution channel. Just like if I wanted to go on Instagram and send Matthew a DM, I could find him and I could send him a DM if I wanted to. So it's like, I'm not sure if I'm communicating this well. It's just, it hasn't been a big focus of mine for about 5 years. I had a lot of success with it in 2015, actually. Okay.
I remember on a recent episode, Gaetano used, that was a primary like method for Sales Hacker, right? Like they built a huge email list because they were just constantly adding value, and people get valuable content delivered and were willing to give their email up for it.
Yeah, and so to get back to your point, Megan, we'll kind of go back and forth here, is that like there's a lot of success stories here for people that are new, for people that haven't been here before, that like people have gotten way better jobs just by implementing some of these strategies on LinkedIn. Not that I'm taking credit, it's all the credit goes to them. I know Katie's crushing it right now. She told her story a couple weeks ago, which is amazing. Like the opportunity is there. If you want something new in your career, like it's there. Okay. Let's get some like leadership or sales, or let's go in a couple different directions. Let's see what people got here. Wow, they're really streaming through here. A lot of stuff, a lot of comments. Okay, so we'll jump back to the agenda. If you have other questions, feel free to drop them in and we'll get back. This was a question from Matthew. I think it was from you, Matthew. I'm not exactly sure. Should content specifically be tied to revenue? And if so, how? And so this is an interesting one. It really is. I think that in general, content drives revenue, but I do not believe in the idea of measuring each piece of content on revenue. I think that becomes more of an attribution game than an actual like content marketing game. So what I do, like if you've been watching me, or a lot of other, it's not just me, a lot of people do it on LinkedIn and other places, is that we're putting out a lot of content which create awareness and build brand, which then leads to organic conversions for people that want to work with us when they decide that they need it, or that we've educated them to a level where they feel like it's the right thing for them. And so I guess when we actually look at it, I would say, no, I wouldn't tie content to revenue. If you wanted, I think Gaetano would better weigh in on the SEO component of it as a top of funnel component. But again, like it's just, I think it's cloudy, and I think it creates the wrong overall mindset, which is put out content, do the right thing, help people, build brand, and then wait for the conversions.
John,
go ahead. Let's do it.
John had a good question actually that is a little related to what we were talking about a little bit earlier. He says, I had an interesting discussion with a VP of marketing, frustrated with their CEO around the CEO not understanding marketing. I have strong opinions, but very few CEOs understand the power and leverage of good marketing. Be interested to kick it around a bit if you're up for it. And I think, I think that's really interesting, because what that really comes down to, I think, is influencing a shift in perspective in another person, and then effectively managing their expectations through that change that you want to make. And that's a skill that all of us should be working on developing, right? Like influencing, being able to change someone's mind, being able to paint a compelling picture, and get them to see the world through your eyes, and and ultimately give you a chance to do what you think is right. So I think that's like one challenge in and of itself. And that really comes down to, I think, repetition, evidence, I think passion, continuing to talk about it, getting other people to talk to them about it. But even when they're bought in, how do you, keep them in the game, right? Because what if 6 months goes by and you don't have immediate results coming through, and, they were bought in at the beginning, but now they're getting worried and they want to revert back to what they were doing before. They no longer think this is the right path. And I think expectation management, I know in my world and sort of the customer success world, that's a huge challenge. And I'm constantly making sure that I'm managing my customers' expectations, that we're aligned. Things are changing every day. And I think a lot of those same strategies that you might use to like manage expectations with your customers can actually be used to manage expectations internally with whether it's your CEO or CRO or anyone else that you're working with. So I don't know, I think that's an interesting topic. And I think some interesting parallels to be drawn, across different functions.
Yeah, we've talked about this a lot, and I actually, like, Gaetano and I are aligned, but I actually think that you and I might not, which should be interesting. But for me, out of pure just like personal experience, and this actually, if you really think and take accountability, this could be on me. But in general, what the conclusion that I'm drawing for people is that if you work with a CEO that doesn't understand marketing, most likely, especially depending on what level you're on, you will never actually change their mind. And it will inhibit progress of your career to stay there. And so it would be, I'm just trying to like give a different example for people. Like, it would be like if you love to bake cookies, but then you went and worked at a steakhouse, like you're not going to cook any cookies there. And I think that's kind of like the same thing for marketers. Like, if you work in a company that doesn't believe in marketing and doesn't cook marketing, what are you going to do? So
I don't know. Most
steakhouses, what you think?
Yeah, most steakhouses have a dessert menu. All I would say is I think that people fall in two camps, right? I absolutely think there are some people that are never going to change their mind, and you need to understand that. And if that is the case, I would agree with your advice. Like, you shouldn't sort of bang your head against a wall for no reason. That said, I have worked with CEOs that are more open-minded. That said, it often takes time and persistence to actually, change their perspective. I think, I sort of in my context, I think one of the things that I really believe strongly in at one of my companies was eliminating variable compensation for customer success. And my CEO just had always had commission for them and just didn't think that there was any other way to do it, and thought if we turned that off, that, upsell or retention would just dry up with it. And so it took me about 6 months of, making him read a book and showing him examples where it would work and telling him why, and getting someone on my team to express their viewpoint of how they would feel about the change as an individual contributor. And ultimately, we did make the change, and, we did convince him. Now, that said, I think you're right. It's not a guarantee. And I think what's really important is you have to pick your battles, and you have to accurately assess whether you can change someone's mind or not. But I do think it is possible. And I think that if you feel strongly about something, it's a worthy battle. And there's nothing wrong with trying. And if it doesn't work out, then moving on to the next thing.
Mm-hmm. Right on. So we have a couple great questions. One from David that I think will be helpful for everyone here. Well, maybe not. I think there's some relevance to everyone here. Advice for a salesperson who is doing marketing on the side. And this is interesting because what I'm getting at is that I think that marketers should be somehow trying to learn sales. Not that you need to become a salesperson, but that you need to understand it. I think it's a huge insight. It's something that I've been moving towards over the past 5 years of my career, but now I've done it for 18 months. I have a huge amount of respect for the sales professional that I didn't have 6 years ago. And so I think that is something that it would benefit a lot of marketers to do. Not to say that there's going to be some place where, you know, marketing and sales collide and you become one thing. I actually don't believe in that theory. I think that it can work on the fringes, but I actually don't think that in general a standardization around having a team that becomes like one unit, I don't think that works. I think that they're two separate functions that serve two separate purposes. It would be like product and sales coming together. I just don't, I feel strongly about that one. So advice for a salesperson who's doing marketing on the side. So David, my suggestion would be, and it depends what kind of marketing you're doing on the side, whether you're doing it as like a freelancer for a company, or you're trying to learn. Like the first step with a lot of things that we talk about is, what are you trying to accomplish? And so are you trying to accomplish to get better at marketing, to transition into marketing? And David, feel free to come off mute. I can unmute you and you can we can talk through this. This will be fun. I'll put you on the spot. Is he still here? Yeah, he's still here. I'm going to unmute you. Let's do this.
Hi, everyone. David here.
What's up, David? Let's do
cool.
this.
Thank you. So I'll just give you a very brief background. So
yeah.
I started out in like development and programming. That's where much of my career was. I gradually moved into a little bit of marketing on the side because I found it fascinating. And then I moved into sales just because the person who was doing it left the company. I was the only person who didn't freak out talking to people. It's like, hey, I guess I'll do that. And so gradually working at smaller companies, I melded those needs into like my position, my role. And what I did was kind of an organic thing over time, right? I don't have a pedigree in marketing or anything like that. You know, where my role is now is I kind of utilize my background that I've developed over time to kind of help with kind of a consulting approach, a consultative approach to sales, to really lead with value. That's like I try and help people solve their problems as early as I can and show them how we can take that above and beyond that. But, you know, I have trouble sometimes thinking, you know, one, with imposter syndrome, but two, you know, am I overstepping my bounds a little bit? Or am I helping in a really meaningful way? How much should I kind of stay out of, you know, the actual pure marketing team and what they're doing? I wrestle with those questions quite a bit.
Yeah. So this is an interesting one, because that I think that in a company that's not doing marketing that well, I think that one salesperson could outperform in results the entire marketing team. I think that if one person did LinkedIn well, that they could generate more revenue, because what's marketing right now? It's just a much more effective way to do business development. So I think that every sales rep should be doing quote unquote marketing, content, personal branding, whatever you want to call it. And so I think this is a good idea. Like, I think that it depends where you want to draw the lines inside of where you're working in the organization. Do you want to actually like be with the marketing team and talk about positioning and like logo design? I don't really recommend that, but I do think that the downstream nature of creating content, pushing it out, providing value, engaging with people, building a little like community or group or something like that. I think all of those are things that an individual rep could do, especially at a small company that might not have a marketing engine that's running well. Like, to me, that is the way that's the way that someone becomes the number one rep.
That's great. Well, thank you. I appreciate that. I'm going to do it.
Yeah, man. Looking forward to it. Feel free to connect with me on LinkedIn. I would love to see what you're doing. Cool. Megan, any thoughts on that one?
No, I mean, I agree. I think that anyone that engages with customers on a regular basis is an asset to marketing, in my opinion. So I agree with everything that was said. Ashley asked one of my favorite questions that I love to talk about: what strategies can be used to align marketing, sales, and customer success around the value of having a deep understanding of the customer? I'm just going to jump in because I have a lot to say about this question.
Great one.
When I was at Managed by Q, I first joined as the head of account management. And I was focused on that role, account management, customer success, sort of blended into one, plus customer support. for about 6 months. And I had built, 2 prior teams at 2 other customers. I'm like, I have my playbook. I know what I'm going to do. I'm going to make my team the best team out of the company. I had so much tunnel vision that I did a great job building out my function. But in hindsight, potentially at the expense of others, whether it was sales, marketing, or operations, just because I wasn't looking at the broader picture. Over the course of about sort of 6 months into Q, over the course of about 7 months, there was a shakeup of the leadership team, and I effectively took over sales, marketing, and operations in a really short period of time. So all of a sudden, I was now responsible for all of these functions, some of which I didn't really have a ton of experience in, and some which I had more in. And I think only at that point in my career did I really appreciate like the dependency and the interplay between all of those teams. All of those teams are important. We need them all. We need marketing, we need sales, we need success, we need operations, especially in a large sort of B2B SaaS or services company. They all play an important role. And when I inherited all of these teams, and partly my fault, there was a lot of tension between them, right? Marketing and sales didn't get along, sales and account management didn't get along, sales and operations didn't get along. And I realized that one of my biggest challenges was, how do I actually unify my org? How do I get everybody working together effectively and like not getting in each other's way? Like it was my aha moment where I was like, holy shit, we are getting in our own way of our success because we literally don't think we're on the same team. And so to answer the question very specifically, I did several very tactical things in the org that really created that alignment and had us all working in service of the customer. And so one of the things was, I'd realized we had a very loosely defined ICP, and we needed to revisit that and get crystal clear on who our ideal customer profile was. Who is our customer that loves us the most, that gets the most benefit from our business, that drives healthy unit economics for us to grow. So we really dug deep in there, and we made a lot of adjustments on the marketing side, on the sales side, on the account management side, and said, okay, we're going to go all in on this segment, and we're going to start to deprioritize these other segments that don't make sense. The other thing that was really apparent to me once I had all of these teams was everyone was making their own process within their department without connecting it to the other team. And so we did a really fun customer journey mapping exercise. And so what if you look at, from awareness to acquisition to onboarding, retention, growth, advocacy, if you look at that whole entire journey, what are we trying to create, right? And I went to my team and I said, okay, everybody, this is our customer, and this is what we want our customer to experience. Now, you all need to make adjustments in your teams so that we can deliver on this experience. Like, that is our mission to do so. And I think once we had a really clear, common goal to work towards, things started falling into place. Marketing and sales started talking more. Sales and account management started talking more. It wasn't perfect, but those activities really drove significant alignment, and it created almost like a shared or common goal. So it's like, it wasn't just MQLs or hitting the sales quota or, the churn metric. It was like, actually, if we nail this, all of those metrics will fall into place if we just focus on doing the right thing for our customer at the right time. Okay. That's a lot of
this is essentially the thesis of why companies are moving to ABM, if you think about it. And so a weird thing that I've been thinking about is like ABM, in my view, for some companies, just an excuse to better define their ICP. And so, because what's happening is they don't have a well-defined ICP, and marketing driving a bunch of junk, and sales is selling to them, and success is facing the churn, and then they're churning. And so the root of it is just a well-defined ICP that you can go after and target, I find. Cool. So I might miss the name, but I think it's Uma I would love if you could come off of mute and ask this question about selecting the channel if your marketing budget was cut. I think it's really interesting. So I'm going to ask if you can unmute and maybe we can go have a little back and forth here.
Hi, Chris. Uma here. Hello, everyone.
Hey, Uma.
Yeah. So this is very interesting. I got asked this question in an interview recently, and I think I kind of fumbled at it. And so I want to get expert advice from all of you collectively here. So I essentially was asked, how would you go about selecting a channel among all the marketing channels you're using if your marketing budget is cut in half? So it happened to us in my previous company that all of a sudden our budget got blocked and we said, okay, nothing is getting released till leadership aligns. And so we got to do what we got to do. So my approach to answering this question was, I said, I'm going to divide it into two subsections. First is own channel and paid channels. And within the own channel, then I'll identify what is working, what is not working, and how we can increase our conversion and what is the friction that is there. So I want to remove that to make sure that the leads are constantly coming and it's flowing through in our lead scoring. And in our paid channel, then I'll look at which are the channels that have the highest conversion and highest ROI. So in answering all of this question, and the way I was thinking, and this is exactly what we had done in my previous company, and when I was answering this, I think it probably came across that I didn't have a high level overview, but I think I went much more tactical into it. And sadly, I think maybe that was the question that cost me the job. So curious to know how people would, because I think the interviewer eventually did say that when I landed at the word cost to lead, he said, why didn't you say that in the early, right away? So I was like, well, I was getting to it, but I think I went much more knee deep into it. But so of course, there is just so much you can ask the interviewer for a feedback. So I totally understand that concept. The minute he pointed, I was like, dang it, I think I missed it. I could have just said cost per lead. But in my mind, it's still not settled. I think I answered it correctly based on the experience that we personally had.
Yeah. So
but, I thought good to ask you guys, what do you think? Like, how do you go about selecting channels?
Yeah. So first off, your first answer that you just told everyone was much better than the cost per lead. Okay. So if that person wanted to hire you because of whether or not you said, I'm going to pick the channel based on how low the cost per lead is, they're fucking stupid. Because that is not the right way to select a channel, because I can run performance marketing on display ads in weird countries and get leads for 30 cents. And none of them are going to become customers. And so that is the wrong answer. I think that your answer was more correct. The way that I would look at it is, if you think about the budget getting cut, the first thing to think about is how is your budget divided based on resources like headcount and content or other creation like that, and then paid. So like variable expenses like content or events or different things, and then like paid distribution is kind of like the three core buckets, and then there's obviously like buckets inside of that. And so I'd look at that, and then let's just pretend for the sake of conversation that there's no headcount affected and there's no content affected, so it's just on the paid side. And so inside of the paid side, the way to optimize is on customer acquisition cost, total customer acquisition cost. So I've been trying to figure out a way to slide this into to a demand gen live, and maybe we can just do it here on a screen share. I actually think it would be super valuable to people. So let me see if I can just pull it up real quick. Sorry, I'm gonna fumble this, but I want to get it.
John, I agree with you. That was I don't want to name the company, but that was a bummer. I cleared 5 rounds, and I think that was one question that I got cost, and then that's where it dropped. So I agree with you, John. John Montague.
I'm gonna find it. I'm on a mission now.
Maybe everything works out for the best then. Might have not have been.
Might have not been the right fit. Oh, yeah. And this is weird because I said this on a podcast the other day while I bring this up for people.
It was a really good fit. It like job function matched to my experience dot by dot. I went through 5 rounds. Everybody gave me thumbs up, and it was the 3 levels removed up who I would be reporting to, and that was one question, and that's where I was like, dang it, that was one interview. I think I came out feeling I think I missed it. And I did get the feedback eventually. I asked for a feedback. I did get from the hiring manager that be more concise in your answer. I'm like, I think I gave a more detailed, experienced answer, but anyway.
It sounds like you did everything right. And if that was at the high leadership level, they're setting the tone at the entire company. So even if the other people that you met with were great, that would have come back in many forms throughout your tenure there, should you have joined. So I'm a big believer that everything happens for a reason, and your path will end up in the right place. So I'm sorry though, it's disappointing when you don't get something that you want, especially when you think that it's going well for a period of time.
Yeah, thanks, Megan. Appreciate that. You guys are such big morale booster.
Gosh, I'm really trying to find this for everyone here. I finally got it. Thank you for doing that. I want to show you this, everyone, to this. So when we think about customer acquisition cost, this is not usually the standard way that people do it. And so inside of this, I'm going to pull it up for everyone. When I'm looking at revenue contribution, by the way, someone like feel free to raise their hand or like interrupt me if I showed this before, but I don't think that I have. Cool. Is when you look at revenue, especially in a recurring revenue model business, this is the way that I break it out. Like companies have us come in, it's a month-long project to figure out what is going on inside of all these channels using pairing ad data and content and CRM data and marketing automation data to figure out what's happening here. And so you look at the total revenue, you obviously have the current base. I omit that. My marketing, and I think like demand gen is typically focused on net new. There can be a customer marketing. Honestly, like I think a lot of the marketing that we do can work across the entire funnel. So I think that we're touching and influencing existing customers, but it's not a focus and it's not how I measure the success of the role. And so inside of net new, you're going to have an outbound channel and you're going to have an inbound channel. The reason that I look at this as outbound and inbound is because it's based on the customer, not on who's taking credit internally. And so did we go to the customer outbound, or did the customer come to us inbound? And so it's weird when you start to look at this because there are outbound marketing channels. Like I think that running performance marketing on Facebook in a lead gen form is actually outbound marketing. The reason I think that is because the conversion rates are very poor. And so when a customer is coming to you, the conversion rates through the funnel are going to be way better. And therefore, oftentimes the customer acquisition cost is lower. So inside of this, then you have all these different things. This goes right into your the question that you brought up. So you have all these different things that you're doing. And then if you break down paid digital even further, you have all these different things that you're doing. And then you need to look, because when we look at some of these things, like I don't use Facebook as direct response. So if someone came in here and measured it that way and didn't look at what was happening on the channel or understand the goals, they would think that Facebook is a waste of money, but it's not meant for that purpose. And so the first thing that I would do is try and figure out whether it's based on pure data or on intuition of the strategy and the qualitative feel that you get from the channel, is which channel is making the most impact. Search is going to be the most easily measurable, and performance marketing on LinkedIn is probably the two in B2B if we're looking just in this paid digital bucket. And then break it into customer acquisition cost. When we have customer acquisition costs, especially for a lead gen execution for people, when you add this up, there's one way that I look at, which is just pure advertising CAC. And so I'm gonna stop sharing the screen just so I can explain this now. There's one that's just pure advertising CAC. So I spent, it cost me $50 a lead and I won 1% of the deals. So therefore the customer acquisition cost was $5,000. That is the marketing CAC, the advertising CAC. And then if you layer on marketing expenses, so headcount or content creation or different things like that, you could end up getting marketing CAC, and a lot of people don't define it this way. I think it's very smart to do it this way to drive strategic decisions. It's how many marketing sourced, how much marketing source revenue did we get and how much expenses from marketing did we have? And then the third one would be total CAC. And so if you have a lead gen execution, it's going to be the advertising expense, the marketing expense, the SDR expense to follow up, and then the sales comp. It's a very expensive way. So not only looking at it based on if you think about the cost per lead, and it's weird that we got here because it was actually on the agenda and we skipped it, is that the cost per lead of $50 is only the tip of the iceberg about what's actually happening. And so I hope that was helpful for people. If people like that, I can go deeper next week. I spend a lot of time on like analyzing those things and helping people make informed decisions about how to grow their revenue engine. So, right, if you look at outbound and inbound, and then you start to break down what are the expenses in outbound, what are the expenses in marketing, what's the efficiency, what's happening, how is it going to scale? It starts to get very interesting as you're trying to build a business. Cool.
Thanks so much, Chris.
Thanks, Uma. Cool. Let's get one more in, and then we'll get everyone off to bed. Let's see.
People do love your topic, so be ready to go deeper next week. Oh, and Matthew doesn't want you to forget the dog.
Okay. Yeah, we'll get the dog in here. She's ready. I'm feeling good. I want to get to one more if we can.
Yeah. I'm just speaking for the people here.
Yeah. Let's see. Matthew had a question, but it seemed rhetorical. Know your clients. This is all kind of chatter. Okay. Doesn't seem like we have any other questions. Last chance. Any takers?
Shannon, any insights on budgeting, predictive modeling? I've been asked to reverse engineer from revenue targets, cost per lead, and I'm afraid it will drive poor behavior. Kind of expanding, I think, on what you were just talking about.
Yeah, it's a good question. So when I think about this at a high level, the idea of both predictable revenue and predictability and scalability is people wanting things that are easy. It just doesn't work that way unless you're doing certain things like running Facebook ads to people or Instagram ads to sell socks to people that everyone can buy socks. In complex B2B, it's a lot more challenging, especially based on all the friction points to get there. Like they have to convert to a lead, they have to talk to a sales rep, all these different things. And so when I look at predictability, here's where I'm at, is that you can calculate back like the historical data through the funnel, right? Like you can have your baseline and you can actually benchmark that against what, like now that I've done this at 25 or 30 companies, like I know what that number should be based on certain ACVs and certain marketing models and different things like that. And so like if I'm not seeing a 20% win rate from SQO to win, then I know that something's wrong. And if I'm seeing 20% win rate on inbound and 27% win rate on outbound, I also know something's wrong. And so that's kind of like patterns. But anyway, getting back to it, you can calculate through the funnel. The challenge is when you actually try and scale. And so if you're getting 50 leads and you're converting 20% of them and you're winning whatever that is, 10 customers a month, right? That works. But then the idea of going from 50 to 500 at the top of the funnel, you're going to lose quality along the way. Like I think in that delta of the 450 is normally performance marketing where you win 0.1%. And so you did all of that extra work and you spent all that extra money and you actually didn't even get another customer. And they were all happening in the initial layer. And so when you look at it, you can obviously like forecast, and we talked about that a little bit last week. Like if you're getting 50 and then you do a lot more of the activities and you end up getting 80, you should be able to forecast that. And so those are some of my thoughts. Like the conversion points through make sense. It's just about knowing that there's a couple things. One, knowing that where they come in is super important. If you looked at the conversion rates between your web chat and an inbound phone call and a demo form and a contact us form, they're all going to be different. And so knowing how they get to you is really important. It could only be like a couple percentage points difference at the top, but when you actually look at it all the way down, it can make a meaningful difference. And so, yeah, that's I do believe that you can get there. The difference is when you're trying to grow it, that it just doesn't usually work that way. What do you think, Megan? You've been in a lot of big, fast growing companies. Is predictable revenue easy?
It's not. I think in my experience, and most of the companies I've been at have been sort of startup-y. Although I have been at a company that IPO'd as well. I think most of the time budgeting and forecasting is often backed into based on a desired revenue number that you want to hit at some point in time. And then everything else is filled into the spreadsheet to tell the story in Excel. And often then people are held accountable to numbers that people make up. So that happens everywhere, all of the time.
Why does it happen?
Typically because founders or executive teams are under a ton of pressure to grow quickly, to prove to their investors or the board that all the millions of dollars that they got are going to something good, and that they'll recoup their investment, right? And I hope with all the WeWork debacle and all of that crazy stuff, like I believe we're in the beginning of a transition of moving away from growth at all costs and thinking more about growing responsibly and using historical data to, set targets. I think one of the best people that I worked with actually at one of my earlier startups, when we were doing goal setting, they were just like, I don't know. I have no idea what we're going to do. And I could make up a number, but let's see what we do for 3 months. And then the next 3 months, let's try and do better than we did before. And so I think it takes a lot of courage to admit that. It takes a lot of courage to stand up to investors or a board and make a case for why it's going to take X amount of time. Most people just don't have that courage. And it's tough. I empathize with the founder that has to navigate that situation. But I've never seen a number that was made up be hit. And typically it not only are goals missed, but it's completely demotivating to the people on the team. And usually things just deteriorate from there. I'm hoping that we're in a shift, though. I hope a lot of that is in the past, but not quite yet.
I've watched the back calculation in a spreadsheet at so many companies where they pick a number typically based on whatever their burn rate is and whatever valuation they need to get to in 12 months. And they put that number up because that one's clear. And then they back figure out what they need to do, and they put it together in some financial model that looks nice for investors and everyone. And I'll tell you a story. There was one company that had 40 reps in the US, and with those 40 reps, they think, or the year before with those 40, they had done like 6 million net new. Okay. And so they knew that they had to continue to grow to keep raising money. So they said, okay, we need to do 12 million net new next year. And so here's what we'll do. We'll double the amount of reps. We'll cut everyone's territory in half. And here's what will happen. Everything will be great. And here's what actually happened. The best reps got their territory cut in half and they left.
Yep.
The bad reps stayed. The new ones didn't ramp at any point in time. There was like 3-month ramp. None of them got there. It was all luck of the draw. And then you ended up doing 6 million, but you spent twice as much on sales. You know what I mean?
I think a lot of us have seen this movie before. I'm seeing a lot of head nods.
For sure. So, cool. Well, I appreciate everyone joining tonight. I know Gaetano couldn't get here. I think he had something with family, and we always love having him here because he adds just wild level of personality that all of us love. we're very grateful that Megan subbed in, because I know that nobody here wants to listen to me talk for an hour and 5 minutes straight. So I'm glad that Megan was able to join and share some wisdom and kind of like a different perspective. And yeah.
And before we close out, Chris, we need to see Aria.
Aria, come here. Aria.
I'm making it happen, guys. We're going to let him off the hook.
Come on. I know you don't want to get picked up. I know.
Aww.
Hi. This is her. There you go. She hates when I pick her up, but now you got to see my dog. So, yeah, Gaetano will be back next week. We might actually, it'd be interesting to take a poll here with the people that are sticking with us to the end. How would you feel about occasionally bringing on a guest to mix it in? Is that something that you would want to do? Give me a thumbs up for the people here. Cool. So we got a couple people in the queue. I won't announce any names because I don't want to make any promises, but I think we got some good people. I kind of figured that would be the response, which is great. So we'll mix it in every once in a while. I know Gaetano's like working and got some stuff. So when he's feeling like he needs a break, I'm happy to do this every Tuesday, to be honest. And I was reflecting on it last week. There's never a better time of my creative thinking than from 9 to midnight on Tuesday nights. And I owe that all to you, because you challenge me to think. I feel really fired up. I get very inspired by all of you coming here. And so appreciate you a lot. Hope to see you back next week. And I hope you all have a great rest of your week.
Great to meet you guys. Have a good night.
See ya.
you later.
Bye.